Hi guys, thanks for tuning in to another episode of Nuggets News. Well, what a week it's been, what a month it's been. Stock markets are crashing, and lately we've seen a rush to the world reserve currency, which is the US dollar. Today, the Aussie dollar plunged to 17-year lows, hitting 55 cents. And the number one question that we're getting is, how do I get out of the Aussie dollar? How do I get out of the stock market? What are my options? So today I'm going to walk you through how it all works, and particularly the risk, the counterparty risk, if you're going to choose to go into any one of these particular assets. So across the top, we've got the different currencies, and some people don't consider gold and silver or Bitcoin a currency, but for the purpose of this video, we're going to include them in our currencies. And then down the side here, we have the different types, where we have actual physical versions of these, digital versions of these, and then really importantly, the digital versions where you can hold them yourself and become your own bank. And that's the whole ethos of Bitcoin and cryptocurrency, to become your own bank after the last financial crisis, and where we've seen, banks collapse in certain countries and governments hyperinflate certain currencies. Being able to take control of your own wealth and hold that yourself is really important. All right, so let's walk through the different types. Most people are pretty familiar with their own fiat currency. A lot of you watching this video are already probably sitting in US dollars and pretty happy. Or if you're in a different country, you're in your own local currency. The physical version of that currency, obviously our notes and our coins, maybe we'll throw checks in there as well. But most money these days is digital. And this is what confuses people, because they think the banks just have all these notes in their vaults, but obviously plenty of people have tried to go in this week to get money out, and they've been told, no, you can't withdraw. Even $5,000, they've been told, come back in 48 hours or give us a week. What do you need that money for? So it's become very apparent to people who's the custodian and why it's so important about being your own bank, which we're going to get to. Okay, so these are the different types of banks, and where you'll have digital versions of Aussie dollars. You've all probably done online payments. You've got the app on your phone. There's plenty of sort of neo banks and smaller lenders these days, and a lot of companies in the payment space. So you might have a PayPal or a Stripe account. Anywhere where you've got that app or that website where you log in and you've got fiat currency, I guess that's a digital version where they're the custodian. The final one I want to throw in here was something like eToro, where they let you trade digital representations of different currencies, or gold and silver, or cryptos as well. And depending what country you're in, sometimes they're allowed to let you trade the real thing or not. But in Australia at the moment, it's still CFDs. Next up, we've got the non-custodial versions of these. And this is where I think people need to do more education around how they can take control of this themselves, because there are stablecoin version out there that everyone's heard of, Tether, USDC, or Gemini US dollar. There's lots of different versions, probably a dozen now, of US dollar stablecoins, and they have their value pegged to the value of the US dollar, and it's run by a company, and there's dollars in a bank account or dollars in some sort of account. We won't go into that. In theory, backing every dollar they issue up 1-to-1. The next one I want to mention that's super important is the decentralized versions of this. So we're removing the counterparty risk away from the companies or the exchanges that issue these stable coins and these cryptocurrencies and keep the dollars in the banks themselves. And we're saying we're going to back these stable coins up with cryptocurrency, and we're going to over collateralize them. So there's always more value, more than $1 for every dollar of stable coin they issue. So most of you have heard me talk about Maker and their DAI stable coin, and Synthetics, the little Aussie company that do synthetic versions of all assets. So they have a synthetic US dollar, a synthetic Aussie dollar, and I'm not sure for larger amounts the liquidity and volume that's there just yet. So that one's more for the advanced users among you that know how to use their exchange. But this is one that's had a couple of issues recently. I'm not going to go into the details on that, but I'm still very confident that these two, and particularly DAI, are very liquid. You can do large amounts of these, and you can send them to your own hardware wallet. which we're going to get to in just a second. So they're decentralized. You're completely out of this system. You're not relying on a bank or a company or fiat money in any way. They are decentralized stable coins where you can become your own bank. Next up, I want to talk about gold and silver. So obviously people have their head around the concept of buying physical coins or jewelry, or even just scrap metal that has the value, whatever the price of gold or silver per ounce at the time is. But we also now have our digital representation. So you might have an online bullion bank you log into, or you might have heard of the Gold Money app. On the stock market world, we've had these for a long time. We have ETFs, the gold and silver ETF, or the advanced traders might have traded gold and silver futures. So these are all just digital representations that aren't necessarily backed by real gold one for one. Now, you can also get these on crypto exchanges these days. So you can buy gold and silver tokens that are backed up by a real ounce of gold or silver. So once again, you're putting your trust in a company or someone else, but we know Ainsley Bullion, Perth Mint, these are reputable Australian companies that are now issuing these tokens. So I'm very happy to hold those. And that's where we get into the next step about the decentralized, non-custodial versions of these digital gold tokens. So the Ainsley gold and silver tokens, I can send them off the exchange to my own wallet and hold them myself. So I become my own bank. Plenty of others out there. On FTX, they've now got 2 gold tokens, PAXG and XAUT. The other thing that I like about them is that they trade 24 hours a day on FTX. So if you ever need to buy or sell your gold on a weekend, you can do that very easily compared to an ETF, for example, that only trades when the stock market is open in those opening hours and not on weekends. So finally, we'll get to Bitcoin and crypto. Obviously, there's no real physical version. You can't hold an actual Bitcoin. You can hold the hardware wallet that you've got it on, or the phone or your computer, but no physical real version of Bitcoin or cryptocurrencies. So the digital versions where most people buy their crypto for the first time is on a crypto exchange. When you sign up to a website or you install a crypto app, you hook up your bank account or you send money to it, and then you can buy Bitcoin, crypto, or a stable coin. And even exchanges these days like FTX actually have a way where you can sit in US dollars. So you can either use Tether, the crypto version, or you can actually sit in US dollars for you Australians out there. And that's probably one of the fastest ways to get into US dollars at the moment is hooking up your bank account and getting verified with FTX. If you don't want to wait for that verification time, you can already send any cryptocurrency there, for example, and then just sell it and rotate into US dollars. That's one of the fastest ways to do it. CoinSpot also have US dollar Tether, USDTC. So these crypto exchanges have got all these US dollar stablecoin options for you. Etor already mentioned, we've always been big advocates of trying to hold real cryptocurrency. So once again, that's more so if you want to do the trading side of things or whatnot. Non-custodian, decentralized. It is so important these days that you have your own cryptocurrency. So you've got it on a hardware wallet, or you've seen those cards. We're going to do some reviews on some of the other good crypto cards that are out there these days that'll let you spend it as well. A desktop wallet, so where you can download an app on your computer, a program, and install that and set it up yourself. Write down those backup words. We've done tutorials on those. There's more info on our website. For the more advanced users, you can set up a paper wallet or even back up your private keys on a USB stick and then delete it off your computer altogether. So tying this all together, the thing I want you to realize is with all of these, there's a general counterparty risk. Nothing in life is risk-free. Now, probably the lowest counterparty risk of all these options on here is probably gold and silver, physical bullion that you hold yourself. And that's why it's had such a great run recently. Now, the next one is probably notes. If you can get a heap of $100 US notes, for the time being, that's reasonably a safe place to wait out until the dust settles, because once, this isn't going to go on forever. There's going to be a time when the stock market bottoms and we want to buy more stocks, or housing might go down. We want to buy assets in the future. Crypto is going down at the moment. I'm looking forward to buying more whenever that bottoms. But it is very hard to do that at the moment. The banks and the governments are putting in rules and cash bans. They're not letting you withdraw money. That's got particularly bad this week with some of the stories that we are hearing. Because when markets crash, banks get weaker as interest rates go lower. Banks' revenue drops. So some of these banks in Europe, and we've already seen banks collapse in China, that is the counterparty risk. And particularly the governments behind these. It's the governments that are printing money. $1 trillion a day at the moment in the US. The ECB in Europe just announced hundreds of billions of dollars of money that they're going to print to bail out these financial institutions, because we're currently going through a financial crisis. Australia, at the time of recording, have just announced that they're going to start printing money for the first time in history. So that devalues any money that you've saved, or all the people out there that are holding currency. They're getting devalued because governments are printing money to bail out basically the financial institution, which we've been talking about all the issues it has for so long now. All right, so a company in this instance here, all these companies, whether it's a crypto exchange, any sort of business, if you've got money with them and they're the custodian and they collapse or get hacked or go under, that is the risk there. Software, if you're going to put your faith in these cryptocurrencies, you're putting your faith in the code, the software. Now, something like Bitcoin has been around for 12 years and it's never been hacked. So I've got a lot of money in Bitcoin. I've got full faith that that is safe. The danger is with the security. So if you don't know how to store your crypto safely, if you leave your password laying around, or you set up a hardware wallet and you write down those backup phrases and you just leave it laying around, that is the responsibility. For you being your own bank, you need to take responsibility for the security of that, because hackers target people. They try and get into your exchange account. If you're going to leave coins on the exchange, just don't do that, guys. Learn how to store the crypto yourself, because you remove basically all that counterparty risk once you've got your cryptocurrency, whether it be Bitcoin, whether it be these digital gold and silver tokens, or whether it be these digital stable coins. Send them off the exchange, get them on the hardware wallet, and then that is one of the safest places you can park your wealth, I believe, until the dust settles. Now, I just want to finish up by saying that something that people often forget about is liquidity. So can you buy and sell these whenever you want? And is there enough liquidity? Is there a buyer on the other side when you want to sell in the future? So something to be mindful of. The exchanges in Australia are they're brilliant. They trade 24/7. They've got pretty good order books. On our website, we've got a range of free resources for the best places to buy and sell all these. The brokers you can use, where you pick up the phone and they'll walk you through it if that's the way you want to go about it. Particularly if you're one of our members and you want to ever buy or sell over $50,000, just send me a message and I'll give you the number of my broker and they'll look after you personally. So that's it today, guys. Make sure you've got a plan to sell. For more information on all this, head over to our website. There's so much happening at the moment in the world, in the financial markets, in Australia in particular. I know, the virus is going around at the moment as well. So for those day-to-day updates, to the minute updates, our community is there for anyone that wants to join. We get all our extra research and you get to know what I'm thinking throughout the day. So Nugget's Crypto Community, there's a tab on our website if you want to join us there. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.